Hello, guys. Welcome to our second episode of the podcast Let's Talk. I am with Demetris, eToro popular investor, and myself, Akim. My eToro is etc. Demetris' eToro is Demseo27. You can find the references in the podcast. Today we will discuss Middle East. We will discuss tensions. We will discuss why investing in defense does not mean hoping for more deaths. We will also discuss how to hedge your portfolio in uncertain times, and we will touch base on Bitcoin. The halving is this Saturday, and I hope you guys enjoyed the episode, and do feel free to leave a feedback, ask questions at the end of the episode. All right, Demetris. So for the news, for those who missed the news, but the news were really hard to miss. Yes. Basically, Iran sent some missiles on the way to Israel. They tried to basically bomb Israel. I think practically all the missiles got intercepted. In the end, no one died. Fortunately, no one died. One child, I think, got injured. And this was a retaliation to what happened in Syria. Iran thinks that Israel bombed or attacked the Iranian consulate in Syria. Israel, of course, refuses to comment whether they did it or not. And Iran sent those missiles to Israel, which to me, when I saw the pictures, I was like, oh, damn it, that's World War III starting right there. Iran sending missiles to Israel. And all the parties have been trying to de-escalate the situation. Yes. The US, Russia, China, a lot of countries really intervened to say, guys, calm down. Okay, let's not escalate the situation here because World War III would be inevitable. So those are the news in the Middle East. It's really worrisome. But we will discuss the topic from the perspective of investing. Yes. Right? How to orient your portfolio with these tensions that you have in the Middle East.
So I believe the motivation of getting into the defense stack prior to the conflict, it was a statement from James Cameron that said every country needs to spend 2% of their GDP in
Absolutely.
defense. So that's that's hundreds of billions of dollars to be spent within the European Union. And the only countries basically that they have the most weapons to sell are the American companies. So those are the companies you bought. So I understand your motivation because I know you personally, okay? So that's one. Number two, during the weekend, when everyone was saying it's going to be World War III, I was like, the conflict might be escalated a little bit, but I don't think it's going to be a world war, only because everyone is on the same side. It's basically, except with the exception of Russia and China, who else is supporting Iran? And Russia has its own problems with Ukraine. So I don't think they're rushing to get into another war. So if you think it logically, who is with Iran on this?
So Russia is extremely busy. Yes. China also does not want to engage in a conflict outside of its borders, right? Especially far from its borders. It's just not at all in the philosophy of China.
Yes.
And also with Russia, it's not in its philosophy. The US military intervening in Syria to protect the Bashar al-Assad and the Syrian government was an exception, right, to its geopolitical history. But in any case, it's busy enough with Ukraine. So it was already unlikely that a full-out war would be raging in the Middle East. It's possible and probable, I would even say probable, that there would be some local wars, right?
Yeah.
Some missiles here and there, some provocations, maybe some harbor being attacked or some airports being here and there sabotaged. This, in my opinion, can happen. But this anyway leads to instability and leads to a lot of costs increasing, right? Insurance costs increasing for shipments that need to go through the region. We already have the issue with the Red Sea, but now with increased tensions between Iran and Israel, it's likely that shipping costs would increase, insurance costs would increase. So energy would probably become more expensive if everything else stays equal, if the global demand stays just as high, right? If the economies don't slow down, it is likely that energy would increase in price, which means energy companies might make more profit. I do think that defense and energy, it's likely they are likely to outperform. But perhaps there are some other ways to hedge your portfolio. If you don't feel comfortable in investing in military and investing in energy like I do, perhaps you have there are definitely other ways to hedge your portfolio to navigate through this period of instability. And I know, Demetris, you mentioned to me that you did something very exceptional, which you usually don't do, is hedging your portfolio.
Yes.
But I don't know how. And I want to hear from you what instrument or instruments you are using at the moment to hedge your portfolio.
So last week, we were discussing the inflation and CPI, and you asked me, are you thinking of hedging against that? And I said, no.
And you told me no.
I said,
right?
no.
No, absolutely no, with a certainty.
Yes. And I found myself on Monday buying ExxonMobil, a significant amount of ExxonMobil. Now is in my top 3 in my portfolio. So it's 7-8%, if I'm not mistaken.
You had it already as a position, but it was one of your smallest
but
ones.
it wasn't that much. It was
2 or 3%.
So I got it up there now, because in my head, every time there's a conflict in that part of the world, the first thing that gets affected is oil, energy, because of the geography, because of the shipping and all that, and on top of that, in case of a full-scale war, the first thing countries need is to secure energy. So that's why they go up right away. Then the second thing that came to my head is gold, but I'm not a big fan of paper gold, buying gold on the stock market. I prefer the physical gold. And the third thing that came to mind was...
You didn't buy gold, right? This you didn't do.
You mean physical gold or paper gold?
Yeah. Any of them. You didn't, right?
Yeah, I have some. I didn't buy this year. I bought last year. I'm against of the paper gold. I like to have it physical in the bank.
All right.
You know how I feel, because it's probably like 10 miles from Switzerland, and you can just walk into a neutral territory in case of a conflict. So,
and the third point, you had the
third point is US dollars. In the case of conflict in any part of the world, where do you want your money to be, and you feel safe that they're not getting affected? The US dollar and dollar assets is in my opinion the only choice. You can argue with me about Japan and about Switzerland. Yes, but the choices are not that many to be invested during this time.
So the dollar itself, holding the dollar currency, it's a good hedge in the short term, right? Because the value can increase in the short term. But with the Fed that keeps printing dollars throughout the years and inflation biting, the dollar is not a good hedge in the medium and long term. Short term, yes, for a period of couple of weeks, maybe a couple of months.
I wasn't thinking it as a hedge. I was thinking as a safe haven. Where do you want to put your money while this whole thing is clearing out and the conflict is out of the picture? Where do you want your money to be in the next month or two, or however long takes the conflict?
Yeah, I guess if I'm if I live in the area in Israel or Iran, for example, it would make sense. I don't know if you live in Iran if you have the right to, but anyway, if you live in the area, I think it would make sense
Yes.
to own dollars. It's super liquid, so you can
Mhm.
easily convert. You can continue paying with that.
Yes.
You can exchange as you want. So I think the dollar is indeed an excellent instrument.
Mhm.
And we saw that the dollar actually went up
Yes. It was
sharply
up. Yes.
recently. It's not just because inflation is hot and the interest rate cuts will not happen this year, or at least perhaps not as early and not as many cuts as expected. It's not only because of that, but it's also because of the uncertainty you have around the Middle East. And one asset class that really suffers from a strong dollar, which one is it? Which asset is the one that suffers the most when the dollar gets stronger?
You tell me. Which one you
We
tell
have we have in what in 2 days a
me? Yeah.
major event around that asset.
Oh, Bitcoin.
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 Bitcoin is the one that suffers, and it suffered a lot. I think it lost around 20% since its recent
Yeah, I believe 15 to
all-time high.
20%. Yes.
It was probably around 73K, something like that. Yesterday, I saw it dip below 60K. Now
Yes.
it recovered slightly, but it's around 61, something like that. So it dipped. It's almost a crash, actually. I mean, it's a good correction, 20% correction, right before the halving in 2 days. So for people who don't know what the Bitcoin halving is, I'll just say a few words about it. Bitcoin, basically, there's a maximum circulation of 21 million coins,
Mm-hmm.
and you have crypto miners such as Hut 8, Riot Platforms, Marathon. They mine Bitcoin, so they produce Bitcoin in a way. Every time that they process transactions, they keep processing transactions to earn rewards in Bitcoin. And these rewards in Bitcoin, typically, either they hold them, either they sell to make some dollars, and that's really the big chunk of their revenue. And every 4 years, the rewards the crypto miners get from mining Bitcoin, so from processing transactions, the rewards are halved, meaning that if, for example, at the moment, a crypto miner earns around, what is it, six Bitcoin, six something Bitcoin,
6.25.
6.25, right?
Yes.
6.25 in Bitcoin rewards.
Mm-hmm.
Starting this Saturday, it will earn only 3.125.
Yes.
So half of the rewards that it currently owns. There's a lot of fears around that. A lot of people fear that these crypto miners might run out of business because
Mm-hmm.
theoretically, at least half of the crypto miners should run out of business
Yes.
because theoretically, half of the rewards are cut. But what usually happens is that after a halving event, the supply being reduced, right? The creation of supply being significantly reduced.
Yes.
If the demand continues as strong or stronger than it's been in the previous years, the price is likely to increase very significantly over the year after the halving event.
Yes.
And what happened is that, a lot of people are aware of that. After Bitcoin halving, Bitcoin price goes up. But to show that it's it's strongly reversely correlated to the dollar, we really have the proof now. If we needed one more, Bitcoin lost 20% of its value the days before halving because the dollar got so strong because of the instability in the Middle East.
Mm-hmm.
And that also poses the question of a lot of people say that Bitcoin is the digital gold, but in periods of instability, investors flock to gold and they flock to the dollars,
Mm-hmm.
and Bitcoin tends to crash. And Bitcoin tends to perform better in periods of less instability, when everything is booming, when the rates are being cut,
Mm-hmm.
when the dollar is very cheap.
Yes.
So how am I supposed to understand that, actually? Bitcoin being a hedge instrument, apparently, Bitcoin being the digital gold, but at the same time losing value every time there is instability and investors flocking towards the dollar, even the week before the halving.
So
I mean, it's messed up. I have now a hard time to understand how Bitcoin behaves. And that's why the asset itself is quite unpredictable and volatile. It's because there's so many variants, right, in play around the price of Bitcoin. It can be just algos of a couple of huge investors messing up with everything also, right? There are a lot of criteria here at play, a lot of factors at play that influence the price of Bitcoin. What's your take on Bitcoin, and do you see it as a hedge to instability? And perhaps this week, exceptionally, the algos decided to short Bitcoin, basically.
no, I don't see it as a hedge. It's not as stable as a store of value should be in times like this, because as soon as the market opened Monday, gold went up and
Yes,
Bitcoin went down.
went down.
In the one hand, it was near the all-time high, and I'm sure the majority of people got in 65, 66, 67, and then you buy and you expect to hold, and then you turn on CNN and you see World War III is happening. So you're basically selling. We didn't sell. I didn't sell anything. I'm sure you didn't either, but I'm talking about crypto.
Yeah.
But that's how people behave, okay? That's one. Regarding the crypto halving, basically half the supply is going to disappear from the market, right? Or
Yes, half of the new supply, yes.
half of the new supply will disappear from the market, or the demand will double. It depends which way you want to see it, basically. So assuming that's the case, because you know what? I don't remember the last halving. I mean, I do remember, but I wasn't paying attention as the same way I'm paying attention now. So I don't remember exactly the reaction of the market the days following the halving 4 years ago. So I'm curious to see what happens this year. But the timing is not ideal, though. The timing with the conflicts in the Middle East is not ideal for an event like that.
It's not ideal for an event like that. I was curious. I did have a look at every single halving that happened in the past, actually. Surprisingly, the days after halving are actually pretty boring, very boring even. Even the weeks and even the months after the halving are extremely boring. There's not much going on. But it because it takes around 1 year, around 12 months, for that imbalance between demand and supply to really show in Bitcoin. And the price always exploded 1 year, 12 to 18 months after the halving. And from that perspective, if that happens, and I think it will happen again this time, I think again it will take around 12 to 18 months, because the Fed is likely to cut interest rates next year significantly. This year, maybe we'll have a cut or two, or maybe none, maybe even a hike. But next year, we will likely see cuts, interest rate cuts. It is extremely likely that we'll see a significant amount of interest rate cuts.
Yes.
And that could trigger finally the Bitcoin halving consequence a year after the halving event we have this Saturday. But again, I mentioned in the beginning that the price of Bitcoin is very unpredictable. Okay, we have the halving event, but if you have World War III starting, it seems that investors and markets would flock towards gold and towards the dollar rather than towards Bitcoin. And now we don't have any excuses anymore, because there are Bitcoin ETFs.
Yes.
So you have investors, institutional investors, they absolutely could go into Bitcoin to use it as a hedge or to preserve their wealth, but they didn't do it with the missiles coming from Iran to Israel. It was again the dollar and the gold that benefited from that. And I think also silver, but silver is very similar to gold in its behavior. But again, dollar and gold, no Bitcoin.
Yeah, I mean, And I was thinking about this during the weekend because Bitcoin took a dive, not just Bitcoin or crypto. And then you try to compare gold and Bitcoin because everybody's coming on TV and they say Bitcoin is a digital gold. And one of the positives that regular gold has is that not all of it is online.
Mm-hmm.
You can't just go on your phone and sell your gold unless you're invested in GLD, the paper gold. But if
Mm-hmm.
you are holding an actual physical gold, you not have it in your house. You have it in a security deposit in the bank somewhere.
Mm-hmm.
So walk into a bank, getting your gold and going selling it, it's one thing. Going on your phone, putting your fingerprint on Binance or eToro or whatever the case may be, and just press sell because you don't want to lose temporarily 3, 4, 5, 6% because a major conflict is happening far away from you.
Mm-hmm.
That's the case. You are in New York and you see the conflict in the Middle East and you're just selling your Bitcoin. But I guess that's the nature of the markets, right?
You make actually a fantastic point, is that you're preserving some of your wealth in physical gold that you hold at the bank. You
Yes.
cannot go over the weekend because you heard some news
Yes.
and sell it, right? And the same applies even to the dollar, actually. You hold dollars, you cannot sell the dollar because if you want to sell the dollar, it means you're buying something
Buy
else,
something else, yes.
right? And
Yes.
no one's going to buy something else in period of uncertainty. People will want to be in cash and will want to be in gold. But
Yes.
Bitcoin, to sell it is extremely easy. You press a button, there you go, you have your dollars, and there you go. And 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 that is why Bitcoin is also so volatile. As
Yes.
a lot of people, I mean, I agree that if you look at all the criteria that define gold, you would find them all with Bitcoin. You would find all of them that they could be applicable to Bitcoin.
Yes.
That the resource is scarce. That all the criteria that define gold, except that gold is not easy to sell. It's not that easy to sell.
It's not as liquid.
It's not liquid, and it's a bit like real estate. That's why real estate is also a fantastic way to preserve wealth, because you cannot come and, like, basically when you panic during a real estate crisis, sell your real estate, because during a real estate crisis, by definition, there will be no one to buy your real estate because
Yes.
there's a real estate crisis going on,
Yes.
and so you are forced to hold. And being forced to hold for the long term is actually when you make a return. And you and me, as investors that hold equities, mostly equities in our portfolios, we have that advantage that we understand that you should try to not sell. That your real advantage against all the other market participants is not your brain. There are a lot of smart people, and smarter than you and smarter than me, people out there. There are a lot of investing firms that have teams of 30 researchers and 50 analysts and 100 portfolio managers. Of course, in theory, they do have more information to make more informed decisions and better decisions. But what they don't have is that they need to always have results for every quarter. At the end of every quarter, they need to show positive results. At the end of every year, they need to show positive results. Those are for the institutional investors and corporate investors. And for the retail investors, they tend to panic very easily.
Yes.
They see World War III, they sell everything, or they see troubles in Middle East, or they see their, I don't know, Netflix or Google or Nvidia stock dipping 15%. They're selling at a loss, and they keep accumulating losses that way. But a wise investor like you and like me is an investor that understands that the biggest moat that he has against the markets, the biggest edge that the investor has relative to all the other market participants, is patience. Very, very few investors, corporate, institutional, or retail, have patience to hold over a long period of time. I had a look. The average holding time of equities at the moment is 6 months. So if you hold more than 6 months, any equity, any stocks, it means you're more patient than than half of the market. Just 6 months is not much. Just hold it more than 6 months,
Yes.
and you will see that you will start seeing the benefits of holding over a period of time. And imagine holding over a couple of years. Imagine holding over a couple of years.
It's very tough to hold for a couple of years, and I have done so. But
You have to have faith
you have to
in
have
what you're.
faith, and you have to be able to control your impulses. And the best thing and the worst thing, so the best thing and the worst thing about investing in equities and crypto, it's the same thing. The best and the worst is the same thing. Instant liquidity, the ability to get in and out within minutes. It's the best thing that I like the most, that I can get into a new position just like that. But for people that they can't control their impulses,
Yeah.
they don't follow the news, they don't have the correct information.
Yes.
That's the worst things for them, because they're gonna get out at the worst possible time. And one more thing that it came into my head last night. I was thinking, never say never in the stock market. Never say that thing is not gonna go up, that stock is not gonna go down, that's not gonna happen, that doesn't happen. It's so unpredictable. The markets, especially the crypto market, is so unpredictable. You and I were talking, we say, what are we going to talk about until on Thursday? And you say to me, something is going to happen. Something unexpected is going to happen between now and Thursday. So never say never. Always be prepared for the worst and have an action plan.
I love that. I love that we finished on a quote, because last week we finished on a quote, and today's quote is never say never. And I love the quote. And guys, thank you for listening to our episode, and good luck investing, and never say never.